All right, so are you seeing the PowerPoint?
Yes.
Okay, good, right. So tonight, as I said earlier, we are looking at the cup and handle pattern. Just picture it, your cup with a handle. What is that all about? Again, remember when we just started, I made mention and we raised it many times that the algorithm that runs the market, the entire platform, is all about repetition. So everything repeats itself. And this is why we can always find points in the market where we can find resistance level that dates back to years and support level, and they're always current. So the market repeats itself. It's just a cycle that goes on and on. So once we understand this and we can identify various patterns because they repeat themselves, it becomes easier for us to trade once we identify those markets. And again, some of these patterns can be applied at different times based on the condition in which the market is. There are times the market is moving, is very liquid. There are times again, the market is very slow. So you have to employ various strategies. If you can't see a clear trend or a clear point of entry, you may have to change your strategy to be able to identify and to do that. So the other pattern we're adding in our arsenal tonight is cup and handle pattern. What is the cup and handle pattern? There we see the bowl of the cup here that starts at this point here, and that's the bowl of the cup. Then we have the handle. It's more or less a teacup, right? The handle. So the cup itself is like, if you, let's suppose you decide to rest a saucer over the cup, this is acting as resistance. So whatever is inside the cup is finding it difficult to get out. So you have a cup of hot tea and you cover it down, it is going to settle and you're going to see all the evaporation when it condenses back on the bottom of that cover. So this is our resistance line. But once it breaks through the resistance, then we see how the pattern evolves, and this is what we can trade. So this is a snapshot of what the cup and handle pattern is all about. Again, we have the cup and we have the handle. We can see here that the formation of this here sort of looks like it's in a downtrend and the trend is about to make a shift. Let's see as we go along with this here. So what is the cup and handle pattern? One of the classic price patterns of traders is the cup and handle pattern. This pattern is of particular interest to experienced traders when it appears. So today we're going to look at this special price pattern and how we can use it trading with the highest efficiency. I remember maybe about 2 months ago, a colleague of mine, another trader who is part of the other organization which I started here. She called me one morning and she said, Millet, I'm seeing something here. I may just make some good money on some trade here, but I'm seeing another pattern develop. And all I was doing here was working on the cup and handle. And I'm seeing one on a currency coming up. And I think you should take it. So in case you're watching it here, and that time I was driving, she said, I know you're driving, but here's what. Don't even go ahead and look at the chart to analyze. Just take the cue from me and just make a buy on that currency pair. So I just stopped, I did that buy, and it was a successful trade. And this, I just brought in that here to show how certain we can be once we get a good cup and handle pattern. We can take it with a level of confidence. So let's get into it. Again, at any time, you can just maybe just unmute yourself and ask question, or we can pause, or we can go back and do that. So cup and handle is a price pattern that occurs during an uptrend of the market. As its name, this pattern consists of 2 parts. They are the cup and the handle. The cup part looks like a U shape. This is a slight bearish adjustment in the price before hitting the bottom of the cup and rebounding slightly. So we can say again here, we have just a little retracement before the price moves forward. So it starts off by looking as though it's on a downtrend, which is sort of a bottoming off and then taking flight bullish movements. It is followed by the handle part. This is a recovery in prices located on the right side of the cup. It's located on the right side of the cup. This decrease takes place faster and less than the cup part, so it is usually in the V shape. It is usually in the V shape. The cup and handle pattern is complete when the price breaks out of the right top of the cup and goes up. So again, the handle pattern is complete only when the price breaks out at the right top of the cup and goes up. So it forms the handle, and from the handle, it takes off from there. Let's see that in action. So this is our resistance line. And this is price starting over here. And the price would have gone down. So we are heading here like in a downtrend, and the price would have gone down, bottom of here. And the price came up, hit our resistance line. And once it hits the resistance pushes it down, but it didn't go far down. It came back up and it broke through the resistance. And just as our candlestick pattern would say, once we break, we do a retest and then we move on. So of all the patterns, because we are still using the candlestick pattern still comes into play. So this is why we started off firstly by looking at the candlestick, because this is the foundation of all strategy. The candlestick pattern is very important. So even when it breaks the resistance line, it retests and then the price continues upwards. What gives us the surety is the pattern that we're looking at. You may come in the trade and you didn't recognize the cup pattern here, but you realize, okay, that was a resistance line, and the price would have broken through the resistance, retested, and it will take off. But you get more assurance when you identify what kind of pattern it is. So that's the basic thing behind us doing all these patterns. Once you understand one, and two, once you identify the patterns, they give you more confidence in the direction that the trade is going to take. And again, these patterns have been developed from historical data, so they are very accurate. The trick is learning to identify these patterns, and once you identify them, using them to trade, to make your trading profitable. So again, we have our resistance, we have the cup part, it hits the resistance, it comes back down, forms the handle, break through resistance, and after it breaks through, it retests on the resistance line. So this is the handle for the cup, and then it shoots up. On the price chart, you should take careful observation to recognize it. As I said earlier, it might be a bit difficult to recognize it. And one of what makes it a little bit difficult sometimes is the size of the chart. So we might be using TradingView, and sometimes we have to shorten our candles so that we can actually see them. If our candles on our TradingView or even on MetaTrader platform are too long, then it might be a bit difficult for us to see. So resizing it is very crucial in being able to identify various patterns. The cup of the pattern is a long-lasting price accumulation and recovery period. You need to have an overview through multiple time frames to be able to recognize this classic price pattern, right? So again, you know, in a very low time frame, we don't get adequate data to make a determination as to what the direction of the trend is when we go down maybe in the 5 minutes, 1 minute, and those kind of time frame. We need a higher time frame so that we can really identify true patterns, right? So when we go to the next slide, we're going to see a practical illustration of that here on the 1 hour chart. So again, we're saying here, the pattern is a long-lasting price accumulation and recovery. So it takes a while. It is not something that, okay, we watch it on the 1 hour and maybe it lasts 4 hours or 5 hours. It takes a while to develop. And once it develops, it takes a while to break that pattern. This is why we have such a level of confidence in this pattern, right? Let's see. So that's the GBP USD, and we are looking on the 1 hour time frame. So this is over a few days. Remember, each candle is 1 hour. So every 24 candles, we're talking about a day. So this year is quite a big time frame. As a matter of fact, just look at the cup formation here. That's the 3rd of July to the 10th of July. So that's a whole week. Just this area here to here is a whole week. So this year is looking like just over a 2-week period. So because it takes a long time to form, we have a level of certainty that this pattern can bring us a lot of pips because it's a tried and tested pattern. So again, we need the candles small or short so that we can actually identify the pattern. So this is our resistance line. We know our resistance is where we get a few touches. We can see it here. We can see over here the price respected here. And we see what happens under the resistance line. The price came down and down and down. There was a little consolidation, but it's actually forming what we call the cup. Then the price started climbing up. And as the price came up, it hit our resistance and the price came down. But it didn't come back down to that other support level lower down here. We can see that's a support area down here. We have a few touches, but it only came down a bit and it went up. And what happened? It broke through the resistance. And only as it broke through the resistance here, we actually confirm that it is the handle of the cup. Broke the resistance, retested on the resistance, and after it retested, we will get our convincing candle, and then we go in for the buy, and up the trade goes. Again, it is important that we shorten the length of our candles so we can easier identify the various patterns. So we were coming down here, we had some consolidation here at that resistance area. The price went down, consolidation is making its shape, consolidation. The price went up, hit our resistance line again, come back down, it formed the handle, and then we see it broke out, and we're waiting for the retest. We always wait for the retest of when a resistance or support line is broken. You don't just go into the trade when a resistance or support line is broken. We always wait for the retest. Sometimes the retest may not be as pronounced. Sometimes it may not even retest directly back on the support or resistance area. But once it breaks through, the retest is going to be done. And then we get our convincing candle and we enter in for a buy in this case, or we can see again later on if we have to get a sell. But a cup only holds thing when it's standing upwards. So this cup and handle pattern is basically when we're trading uptrend, right? You may ask, well, what happens? Do we have those in a downtrend? But if the cup only holds thing when it is up, somebody may argue, well, here's what, when I wash my cup, I don't put it up for it to drain, I turn it down. So what happens if I turn it down? Well, we can see as we go along, right? Any questions so far?
Yeah, so are you saying then you'll only see that pattern, or it's better to see that pattern on the 1-day time frame or the 4-hour time frame, which?
All right, so bearing in mind that the higher time frame controls what happened lower down, the higher the time frame we identify a pattern, the more surety we have that this pattern is going to play out when we go to a lower time frame. So we saw that in the 1 hour, so we have a level of surety. Here's what, it took about 2 weeks to form, so the market is going to move there for a while. So we look at the 1 hour, but we can also find this pattern on the 4 hour. And if we find a pattern like this on the 4 hour, it meant that the market would have taken maybe a cool month or so to form that pattern if you look at it on the 4 hour. And it gives you more assurance that we're going to be in this one for the long haul. So the higher time frame that we see those patterns in gives us a little more certainty that the pattern is going to continue for a while. So this was the cup. Now we look at the inverted cup and handle pattern, right? So that cup and handle pattern is really when we're trading for a buy, for an uptrend, for a bullish market. That's when we see and we trade with the cup and handle. But now we have an inverted cup and handle pattern. And this is a variation of the original pattern, which is in the opposite direction. The inverted cup and handle pattern can either appear in an uptrend or a downtrend. After this pattern, there would often be a strong bearish momentum. So the inverted cup and handle pattern, it can either appear in an uptrend or in a downtrend. But once that pattern appears, there would be a strong bearish momentum. And why we say strong? Because again, the cup and handle pattern takes a while to form, but once it is formed, the market continues in that direction for a while. So not every uptrend with a little curve like that we will say is a cup and handle pattern. But once we identify it, once it is identified, it gives us a strong indication that this trend is going to continue for a while. So if we're doing the cup, which is up, is going to continue up for a while. If we're doing the inverted cup and handle pattern, once this is complete, normally we have a strong downward or bearish movement in the market, which is sustained for a while. And all the more if you get it on a higher time frame, the 4 hour time frame, or those kinds of time frame, maybe a 1 day, it tells you that this is going to go on for a while. Again, I want to remind us that to see a lot of those patterns, the length of our candles must be short. We could manipulate the length so we can identify those patterns, because if the candles are too long, they would be very difficult to be identified. All right, let's move on. Example of the inverted cup and handle pattern. So it is just the opposite of the cup and handle. Instead of the resistance, we now have support, right? So price has hit the support, and now that the price has hit the support, price is bouncing back. So price is going back up here. Price is going back up, which we know now is really a retracement because of the direction. But here when we look at it and we realize, okay, fine, this is forming the cup here. It comes down and it hits the support. And what happens? It goes back up in a bullish way here. And then the price comes back down. It breaks through our support line. And again, as usual, once it breaks through, we always wait for it to retest. We get our convincing candle, and then the price moves along. So this is our inverted cup and handle. And we still see identical shape to that of the cup and handle, but this time it is reversed. The cup and handle is really when we're looking to buy in that uptrend. Now the inverted cup and handle basically is for the downtrend, right? Illustration now. This pattern usually appears at the top of an uptrend. It is a good signal that price will decline in the future. So once the market gets exhausted and the price has been up for a while and the market is about to change direction, that's when we get those patterns. And that's why once we get a reversal, and again, if we get a reversal here, it tells you at times the price is going to continue for a while, right? So let's look at it here. So the price was going up, the price broke through, and the price settled on that line. So this acted as support. The price continued to go up. It went up and up and up. Then it reached a peak and the price came down. So here we can see the price coming back down, hits that support line and decides to go back up again. It went up and it broke our support line. And after it broke out of the support line, it retested on the support line. Here we have our convincing candle where we can enter the trade and the price starts going down. This again this is a 30-minute chart. We talk about March 1st, March 2nd, March 5th, March 6th. So this again is over about a week period, right? And we can identify this because we'd have made the candles shorter. So remember, it goes on an uptrend, and when the market is about to change direction, after the market becomes overbought and price is getting ready to come down, we have those patterns being formed. And as price comes down on the support, bounces back with a little retracement, forms the handle, breaks through our support, retest, and then we're going. So even if we get into the market and we see the price, the market is around this candle here, we still wait to see. But if in that case we identify that it was a cup that is being formed, then we wait for the handle. We wait for the handle to form. We wait for it to break out. We wait for the retest, and then we get into that trade. How do we trade it now? So we have identified the cup and handle. We have identified the inverted cup and handle. We see how they form, what they're looking like. How do we trade now? So how do we trade the cup and handle? When trading Forex, you need to specify the entry point, stop loss, and take profit before opening an order. So this is not just about cup and handle. This is about everything trading. Whenever you're about to get into a trade, before you get into the trade, you must know where your stop loss is going to be, where your take profit is going to be, where you're going to enter the market. It's just like you get into a vehicle to drive, and even before you move off from your still position, you must make sure the car could stop, so you make sure the car has brakes. This is one of the reasons why to move your automatic vehicle out of park into gear, you must touch the brakes. So at least you get an idea, hey, before the car is ready to move, yes, it has brakes. So if you don't touch the brakes, your vehicle doesn't get out of park. You cannot move unless the vehicle says, here's what, no, check your brakes and make sure you have brakes before you can go. So anytime we're about to place a trade, we must always know, one, where I am entering the market, two, where my take profit is going to be, and three, where my stop loss is going to be. If you don't know these when you're entering a trade, you're just going to be guessing, and then when you see the market starts reversing and you start going into negative, you may tend to jump out of the trade quickly or prematurely. And this happens when you don't know your points. And by your points, I mean your entry point, your stop loss, your take profit. You must know these before you enter a trade. If you don't know these, do not enter a trade. And the thing about it here, knowing this also would mean that you know what kind of money you have, so what leverage you have, what free margin you would have, if or not, or if at all, you're going to be allowed to enter that trade. So you don't just get into trade and jump in, because if you just jump in, just the same way you're going to jump out when you start seeing actions. So you thoroughly analyze the market, and then you enter knowing what your entry is, your stop loss is, your take profit is. So for the cup and handle pattern, where is our entry point? Remember, we're looking to buy in that scenario, right? It's a bullish, so we're looking to buy in that scenario. When after the candlestick, which breaks out of the right top of the cup or the resistance level, completely appears. So you're going to enter once it completely breaks out of the resistance level. This is when you're going to enter, right? So it has to show it breaks out of the resistance level, and then everything else apply. It breaks out, it does a test on that resistance level, we know it's going up. Where is our stop loss going to be? Our stop loss is going to be at the bottom of the pattern's handle. Remember, it formed the handle because it just went down there. It didn't go all the way to the bottom of the cup. It hit the bottom of the handle, and then the price rebounded upwards. Therefore, we know that this is a new support level, so the price would not go below that. This is why we put our stop loss at the bottom of the handle. And our take profit is when the price reaches the increase that is equal to the height of the cup, from the bottom of the cup to the top of the cup. In other words, whatever number of pips from the bottom of the cup to the resistance level, this is the same distance we should put our take profit on. I'm going to explain in the diagram that comes. So you look at our entry point, our stop loss, and our take profit. Good. So this is our cup here. This is our cup going around here. That's our cup. And this is our handle portion right here. Handle. Broke through the support, not the resistance. It broke through the resistance. It retested this here. It retested here. And this is our candle that tells us, yes, it retested properly. And then we enter for the market, and then the price goes up. This is our entry point. Our stop loss, remember, the market was coming down. The market got to the bottom of the cup here. The market went up, up, up. When it came down, it didn't come back all the way down to the bottom. It came down and formed the handle. So our stop loss goes to the bottom of the handle, not the bottom of the cup down here, but to the bottom of the handle. This is where our stop loss comes, 10 to 15 pips below the bottom of the handle here, right? And if you look at it, price never came back down to that area. Once it broke here and it hits our resistance, which now becomes support, price never came below that. But this is our stop loss. But how do we know our entry, our take profit? The distance from the bottom of the cup to our resistance line, that distance here. If this is 50 pips from our resistance to the bottom of the cup here, our take profit should be that same distance, 50 feet or 50 pips above. So again, our stop loss comes at the bottom of the handle of the cup. Our take profit goes the same distance from the bottom of the cup to our resistance. That distance is measured, and this is the distance that is applied for our take profit. Question? Anybody has any question? All right, so since there is no question, let us move on. So this is our cup and handle pattern. For the inverted cup and handle pattern, however, the opposite applies. Our entry point is after the candlestick which breaks out of the right top of the cup, which is our support level now, completely appears. This is when we're going to enter. So after it breaks the support here, retest, because we're going to retest back on this support. After it breaks it here, this is the area where we are going to be entering. Not as soon as it breaks, but it gives us an idea as to the area in which it is going to be appearing. Our stop loss again at the top of the pattern's handle, just as we did a while ago. So remember now, for the inverted cup and handle, we are looking for bearish movements, a sell. So at the top of the handle, this is where we're going to have our stop loss. And our take profit again is going to be the same distance that is equal to the top of the cup. So the height of the cup itself, there above our support line, whatever it is here, this distance we're going to use now to calculate our take profit. Let's see it in the diagram that follows. So this is our support line, price here, and we're forming the cup. So the price is going up, consolidates a bit, then price comes right back down, price hits our support level, and price goes back up. When price goes back up, it didn't go very high, it came back down, it broke through our support level. That's the handle of the cup. Broke through our support level, and it went now to retest. So it broke through, it retested here. So this area here is our entry area, right? So even though we entered at that area here now, after we got, let's say, broke through here, we got our retest, and after we enter here, then even though we had a little pullback, the price never got anywhere near that. The price continued descending. But here's what. Our stop loss is going to be at the top of the handle of the cup. So this is the handle here. This is our stop loss here, not up here at the bottom of the cup, right? But at the here, that's the handle area here. This is where our stop loss comes. But to calculate our take profit, again, we'll use the distance between our support area and the bottom. Well, in this case, we could say top because the cup is inverted, but if they return a couple up or down, the bottom is always the bottom. The bottom may be at the top sometimes, but it is still the bottom, right? So I could say here, from the bottom of the cup, which is now facing upwards, to our support line, whatever that distance is in pips, this is what we're going to use as the distance for our take profit. And it took a while to create that amount of area here, that amount of pips. That's why we have the confidence that the market is going to move and we're going to cover that amount of area. It is going to take a while, but it is going to cover that amount of area. And we can see here, the market going down, there's a little retracement here, and we didn't see what happens after here, but the market is going to go down to that level. So this is our inverted cup and handle when we trade on the bearish market. So in concluding this pattern, says here, practice and familiarize yourself with the cup and handle pattern. This is one of the skills that any professional trader has. Again, it's practice, practice, practice. We have to practice to be able to identify those patterns. Again, earlier we said that we have to learn to resize our candles. And once we resize the candles, it would be easier for us to be able to identify the various patterns, not just the cup and handle pattern, but all of the patterns that we would have done before. To be able to identify them, we need to play around sometimes with the various time frames, but also crucial is the size or the length of the candles that we're using. That is going to make it much easier for us to identify those patterns whenever they appear. Question? Okay, very quiet tonight though. Question, anybody has any question? Is there any slide you want to review? You want us to go back to any of the slides that were done?
No questions, I understand.
It's a really simple pattern. Again, it's a very powerful pattern. It takes a while to form, but when it forms, we have a high degree of certainty that the market is going to go in that direction. So for the cup and handle pattern, that's what it is. You don't have just saying this. Somebody's asking a question? Yeah, just saying this, two persons come to mind from my other group here, that all they studying for them to trade is just pattern. If they don't see a pattern, so the two pattern that they really master is well, we have the wedge, we have a wedge pattern and the cup and handle. And that's all that two people look at to trade. As long as they can find a cup and handle pattern, they're not trading. But whenever they see that, they close eye and they trade. So there are times it takes a while to identify the pattern, but we have a lot of pairs to play around with to identify what. Once they find the cup and handle pattern, that's it. Nothing could prevent them from trading. And when they get into trade, they trade big because you don't always see a cup and handle pattern. But whenever it comes up with some level of certainty. Let's see if there's anything. So I'm just going to just scroll through the slide. If there is any slide we need any explanation on or any question that arise from any of the slide, we can just raise it now. So again, this is a shape. That's why it's called a cup and handle. The cup is not enough for us to make that determination. The handle is what confirms for us that this is actually what is going to happen. So as long as the handle isn't formed, we don't get into that trade for the cup and handle pattern. All right, so then again, this is just an illustration. So we can see the pattern here.
Okay, question.
Yeah.
So do you have to draw that support or resistance line before, or you will come good at it that you could identify to draw that support and resistance line?
Okay, very good question. So like when we're trading and we're marking up chart, it is customary that we just look for resistance and support lines. We just put them in. And once we put in the support and resistance line, now, so even now when you mark your chart up, you start putting in lines. Because we would have done the cup and handle pattern now, I can guarantee you that once you throw up a support or resistance line, those patterns are going to come jumping out at you. It's just like so many things exist and they're right there, but if you don't know what you're looking for, then you don't see it. It's just like you get an X-ray and you're watching it in light, you could watch it from now till when, it wouldn't make much sense to you, but when the radiologist picks it up, he sees so much more in it. And then once he shows you, then you say, oh, yes, I see that now. So once you do as normal, you're throwing up, the first thing we do when we're analyzing charts or doing markup, we draw a support and resistance line. So now that you know that there's a teacup and saucer, not saucer, but teacup and handle pattern, you know now when you drop your resistance or your support line, you try to see if you can identify one of these patterns in there. But it is going to come to a point when you get at it good enough that you don't even have to throw in a line. You can just look at it and see those things that are appearing there. Also, however, when we finish these patterns and we are moving on to even a little more advanced, we're going to get into now some of the software components that is able to identify a lot of these patterns. So we look at those things and we're trying to identify. And if you ask yourself, wouldn't it be good or wouldn't it be a nice thing if I could just have a software that identifies all of the patterns for me and I choose which I want to trade on? And even if you don't want to say, the answer to that is yes. It would be such a nice thing to just pull up a chart here, the GBP USD, and I have software that says, here's what, look at a cup and handle, look at a wedge here, look at a triangle, or look at that kind of pattern here, look at all those things here. It would be much easier for you. And with that here, you get a level of certainty and surety as to which of the patterns you want to use to determine which trade that you're entering. So again, we're drawing our lines as normal so we can identify these patterns. And once we see them and we build the confidence in them, we go ahead and trade along with them. But the key to identifying the pattern, which I cannot overemphasize here, is being able to resize your candles in a manner which would make it easier to see the various patterns. Because if it is too long, it would distract the view and you would not be able to identify some of those patterns. So this was our cup and handle. And then we moved on to the inverted cup and handle again. Remember, we're not getting in prematurely. It is not the cup by itself, but it is the cup and the handle, and it has to break through support or resistance. Then it retests that area, and we know we're getting in for the buy or for the sell in the case of an inverted cup and handle. And this is it here in action. Again, 1 hour, 30 minutes, 2 hours, 4 hours, those kind of time frame, we can identify them much easier. The 1 minute and 5 minutes and so on, 15 minutes wouldn't be as effective as this higher time frame. Once we can identify them, the higher the time frame we identify them in, the better it is. So let's think about it. Let's look, so this is a 30-minute chart here, right? This is a 30-minute chart here. Let's suppose that from the support line to the top of this candle here, let's say that this was 50 pips, right? If that was 50 pips from the support line to the top of this candle here on a 30-minute chart, if this same movement was found on a 1 hour chart, that would have been maybe 100 pips. That same movement we're watching here. And if we have that same shape on a daily chart, you might be talking 500-600 pips for that same kind of movement we're looking at here. So this is why I said that, because we know the various time frame, the length of time it takes. And as we go down in the shorter time frame, 1 minute, 5 minutes, 15 minutes, and so, the with the distance for the peep is much smaller. But when we look at something on the daily, for example, if we pull on the daily, when we see a candle, the length of it here contains a lot of pips. So imagine we found a pattern like this on a daily chart. And after the retest you got in here, I am almost certain that this here alone is more than 400-500 pips. If we look at it on the daily, unlike now where this is a 30 minutes chart. So this is why it is important that we try to identify this chart. It is more profitable for us if we can identify these patterns on the higher time frame and we are able to trade them on the higher time frame. As they say, we make money like peas on those charts. So the trick about, well, it's not really a trick, but the advantage of this whole trading platform is not having 30-40 trades running. But if you can identify 3 solid trades and you put in 3 good trades, you make a lot more than having all these other trades. So here's what, let's put it into practice. You have a $100 account and you decide, okay, I am taking some 10 cents. You can cover quite a few 10 cent trade on a $100 account, right? If you have a $100 account, you could cover 30-40 trades with a 10 cents spread, right? With a 10 cents peep value. But imagine you have 20 trades running at 10 cents. And you see a pattern like this arise. When you decide, here's what, no, here's what. I can take 3 trades on this, maybe at 50 cents each. So whereas you are, I don't want to use the word waste in that context, but permit me to use the word waste. Whereas you are wasting your equity on 10 little trades for 10 cents, which you just analyzing just rapidly like that, as opposed to taking 3 solid trades on a pattern like this, where you have more surety. You see the difference that's going to happen here. So unlike you, like Ms. Brisson, running 12 or 15 trades for 10 cents on just looking at support and resistance, and you're running 2 trades at 50 cents using the cup and handle or the inverted cup and handle on a daily time frame or a forward time frame, what you're making in 2 trades, she might need about 50 trades to make that. So this is the advantage. So when we learn these patterns that give us a level of surety and certainty, we can trade them with confidence and we can take bigger trades. So you're not just always just running and I see I'm taking 5 trades, 6 trades, as soon as the trades come, let us analyze them and weigh them. But if we can trade according to patterns, especially cup and handle pattern like this, it is going to be more profitable for us. And in this instance, we see here, when we got the retest, the market never got back above that. So even if your stop loss was 10 pips, you see on that retest here, the market never even broke that resistance level here. So you were safe all along in that trade. So this is what the patterns are for us. So this is why we are getting into patterns, because we want you to reach to a level where you are identifying patterns and you are trading patterns, because the platform is all about patterns that repeat themselves, reoccurrence of patterns. So once you can identify them and learn to trade them, it becomes much easier. And you're going to get to the point where you can just look at any chart and see the patterns that are being formed on the chart. But complementing this, I am going to teach you and show you how we are going to install and configure software that is going to help us take away all this stress and hard work from us and identify the patterns. So today I'm looking for, I just see the Euro US and the software is going to say, there is a cup and handle, there is an inverted cup and handle, or there is that pattern, there is that pattern, and you decide, I think I have more confidence in the cup and handle pattern as opposed to another pattern. So I'm going to take the trade on the cup and handle pattern. This is where we're going to be going, right? So eventually when you master that on your own here, the manual way, and you really master it here, we get into the digital way where we have the software identifying it directly on our platform. We're good to go. All right, so that was our inverted cup and handle. Let's see if we had anything. So we are trading again. I'm just looking at where we do our stop loss. So again, this here is the bottom of the cup here. That's our resistance line. Price would have come up to resistance, come back down, go back to the resistance to form the handle of the cup, break it through on this candle, retested on this candle, we entered here, our price went up. Our stop loss is right below the handle, and our take profit again is the distance from the bottom of the cup to our support line. That whatever that distance is, we're going to measure that from our entry point to the upside so we can get our take profit. So we're looking at cups that are even. So at the end again, it may continue going up. So what we can do, by the time the price gets at that level here, we can remove our TP and we can put a trailing stop loss if we want. Trailing stop loss is so helpful in terms of milking and maximizing the market. So when it's almost your take profit, you remove your take profit and you just do a trailing stop loss and you just leave the trade to go to continue, right? So this is in our cup and handle, our stop loss, our entry, and our take profit. And these are things that we know before we enter the trade, because we have been following this pattern. It takes a while. We know, okay, fine, this is the support area. So I know this is where I'm going to enter the trade. It is just a matter of me waiting for the right moment to enter the trade. But even by the time the market is here, we know I'm going to enter at this area here, but I'm going to wait for the breakthrough. I'm going to wait for the retest and then I enter. But if the market is here, you already know your stop loss is going to be at the bottom of the handle. You know your take profit is going to be that distance on the upside. So basically, you set everything for entry and you're just waiting to execute. You're just waiting for the retest, convincing candle, and then we enter for the buy in that year. So we know all our points before we got into the market. So you don't have to worry about what the outcome is going to be. We know this is what it is. Even though it pulls down, it wouldn't go below the handle because this is a hard area. And we can see that the handle found some support here, but look, all here is support. We're seeing it here. That's a support area here. You come across support area here. Look at it, it's a support area. So the handle is formed really at a support area. Support area right here that went straight through. This is a support area for the formation of the handle where we can comfortably put our stop loss. And this again is for our inverted cup and handle. This is our support. Market hit the support, market went up, it formed the bottom of the cup, and the market is coming down. The market hits our support and it starts going up. So we can safely be prepared now saying, here's what, I know what my TP is going to be, that distance here. I don't know where my stop loss is going to be yet, but I want to see where it bounces. And it bounces on that area. This is a support area here. Look at it, a resistance area here now. Look at it over here. This is also a resistance area. So we know this here now is where we're going to put our stop loss. And we wait for the market to come back, breaks through our support, retest, we enter the market. There's a little pullback, slight pullback, and the market continues downwards. We have our take profit, same distance as it is over here. And we enter the market and we're good to go. So in a nutshell, this is our cup and handle and the inverted cup and handle pattern. Very, very simple, but very, very powerful. You master this pattern and I can tell you, you are going to love yourself in trading. Question, any question? Are we good with this?
I'm good. I just need to go to the chats and see if I can identify some.
Yeah, so this is what we have to do, as you rightly said, Posy. We have to just be able to get on the charts and see how we can identify some of these patterns. And in any pattern, any strategy that we're learning here, Once we are able to identify, we can go back and check the data and make sure we can back test it to see. So you get on a trading view and you see, okay, let me identify an inverted cup and handle. And when I see it, let me see if the market really went down and how far down it went. You can do it once, twice, 3 times, change your various currency pairs and test those things. This is the only thing that is going to give you the confidence. Because here's what, you may get into a trade like this and they say, well, the cup and handle, the inverted one is so short. And then you realize you're in negative and you're going deep red. But if you have done all your back testing, you're going to realize here's what, even though it's putting me in deep red when it pulls back, I know from where I've seen it never broke the handle where we would have put our stop loss. So I still have some level of confidence in there. Like I said, what night is at there times? I mean, okay, you have trades running, you're minus 1,500, minus 2,000 here. And there is absolutely no worry as to what's going on because you know the trade is going to pull back because of your past experience. I know where my stop loss is. My stop loss is safe. It may just be something that's happening on the market, but it is going to pull back. And I can tell you, it always comes back. But if you're not certain and you don't do the back test to build the confidence, you're going to get worried when you see red. Again, as a trader, you have to love red. You have to love red. If you're scared when you see red, you are not a trader as yet. Trading is not for you. You have to learn to embrace the red when you see it. Bottom line, that's what it is. We are in there to always see blue, but when the red comes, we have to take the red and we have to satisfy and say, here's what, red is still our friend. It tells us that there are blue days coming. And that's what it is. That's just the nature of trading and how it goes. With every strategy, you can always go back and back test it and prove it. And once you've proven it, it builds your confidence to trust in the system. Because I can tell you, the system, the algorithm that the system is built upon is something that just keeps reoccurring and reoccurring over and over. The patterns are consistent. They go over and over. The price may change, the values change, but the patterns are what run the market. So once you are able to master these patterns and see them, you're well on your way to being a successful trader. Bottom line, that's what it is. So that's about it. There were 15 slides on this presentation, and we've covered all of them. All we can do is to get to the charts and see if we can identify some of these patterns so that we can put them into a trading cap. So when we start trading, we can always pull that out from our cap and we can apply them on the charts and enhance our trading. So, question if there is none, or if there is, we can deal with it now. But if there is none, we have come to the end of this presentation with this strategy. Okay, going once, going twice.
Before class?
Could you repeat?
Is this all for class today?
Yeah, we just here. Today was just the cup and handle pattern.
Okay. Yeah. I just identified. I find those kind of straightforward how you explain it. So you just go and look and try to identify some, unless you want to just go on the chat with us and we scan through some pairs and see.
Okay, so we can do that. Let's see. Let's see if we can get on our trading view. And let's see if we can find something here. All right. Let's go to a different currency and see. Are you seeing my screen? You see my screen, right?
Yes.
Yes.
Okay. So initially I said, okay, let's go down on maybe, let's go down in a 1 hour here. If our candles, for example, are like this, it is difficult for us to be able to see and identify anything if our candles are like this. See why I said we need to resize. So if we bring our candle to a particular size, then it might become easier for us to identify patterns. right? What we've observed for the last maybe 2 or so weeks, or even going back behind that, the market has been really, really slow. So let's see what happens. So we can go back and let's just go back and see, scroll back slowly and see if we can see anything like that. So we're scrolling. If you see, say you see. If you don't, say you don't, but we're going.
I just scrolling there, I'm watching. Would the moving average line help you in identifying such pattern?
Not necessarily in that case, eh? No. Oh, you're thinking of looking. Oh, okay, yes, I understand the question that you're asking. In other words, if we could look at the moving average to see the shape of the moving average, maybe like how it forms the cup. That's what you're thinking?
Help us. Yeah, just help. Not necessarily, it may not be accurate because, but it can, help you.
All right. So okay. So here's what. As you bring that in here, when we talk about the moving average, right? We have different kinds of different numbers of moving average. So based on the number that we use, there are some that are tighter than others.
Right.
So there may be settings. Yes, there will be settings that will just give us the midpoint, direct midpoint of the market. So we can be able to use it to sort of see the shape that exists and be able to identify the pattern. Yes, we can do that.
Okay.
But the thing about it, with this moving average that I have here, price is either completely below or above the moving average. So it's not more or less finding the average here or the midpoint between those candles. So what will give us a cue here as to what we're looking for? Let me bring that in let's bring it down to our forwards. If we realize the market is in a downtrend and we talk about cup and handle, what should we be looking for? Cup and handle or inverted cup and handle?
Inverted for downtrend and
right. Good. So now our higher time frame here tells us, and this is going to ease our confusion. Our higher time frame tells us the market has been in a downtrend here. So basically, if we're looking here now, we should be looking not for cup and handle, but inverted cup and handle. Because in the inverted cup and handle, that's when we have our downtrend, right? So in a case like this here, we are looking, they're not up. I mean, sometimes it takes a while to see them being formed. They don't always form easily like this here. So now that we're in a downtrend here, we are looking more or less for inverted cup and handle. You may not find it on a particular currency pair. Let's see what we're looking at here. I see something, I don't know if you see it here too. I see a cup and handle there. You see the cup and handle? Anybody see the cup and handle right here?
Yeah. To the top, above where you say 4H?
No, not too far up. Let's look here. Let's start here, right? You see where my cursor is here? Let's look at what's going on here. It's coming down, it's coming down, it's coming down. See it? It's coming down, it's going up, it's right back to where it started here. Look, the handle comes here. You see it here?
At a cup and handle or inverted?
No, cup and handle we seeing here because I go on the lower time, on the higher time frame forwards and I just zoom it in closer. Because when we were really close, we weren't able to identify it. But you can see, look at the cup here. This is the cup portion. See the cup portion right here?
Okay.
I want us to see it here. And we can possibly we could use the moving average here. We could see it from the moving average also. Look at the moving average here. Shows you the cup portion. Look where the handle comes back down. You see the handle? And then it went up. Look when it went through, it broke. Look at the retest. You see the retest area here? And then up it went. We're going to wait. We're going to spend a while on it here. Look at it here. So we say, okay, fine. We start over that.
You could one question. You could just hide the indicator a little. Just hide it. Let me just see. I find the indicator confusing me a bit.
The moving average?
Yeah, the moving average. You have a next one there. You have a alligator.
Oh, that's the Bollinger Band here.
That's the Bollinger Band. Sorry.
Yeah. But here's what I want to leave it here for a while, just as Posse as the question, because it's easier to see with the moving average on.
Okay.
Okay. Let me just show you some lines, right? All right. So I'm going to show you a line right here, right? So look at what's going on here. So this is our resistance line here, right? Our resistance line, it comes down here. The price went back up again, right? Don't worry about this little peak down here, but the price went here, it comes here, it's forming the cup here. Look at it here. It come here on our resistance line. Okay, fine. It had a little above it here, but then the price came back down, not as far down as support area down here. So let's just draw a line here where we're going to have our support area down here. Let's just put this as a support area, temporary still. The price came back down to that point here and it went up. Broke through our support right here. Broke through the support, came back for the retest, and then the price went up, all the way here, going up. So we can look at this moving average as the cup here. Remember, not because on the chart, on the slide, we look at it and it show you wrong, it has to be wrong like that, right? We are looking at the structure. So this is our resistance area here. We can see that the price came down here, came back up to that resistance area, bounces on the resistance area here. Price stayed around here for a while, came back down, and we can see the handle. If we're looking at the moving average, look at the moving average here, came all the way up. This little moving average here forms the handle, which came all the way down here to form the handle, break through the support, retested, and then the price went up. Let's see if we can go and let's see if we can see one that is a little bit clearer than that. A lot of consolidation here. That was quite a while in 2019. Okay, that's as far back as it goes. Let's try another currency pair and see something. All right, so that's where we are now. Let's see what around this area here is looking like. Let's do. Remember, we're just drawing a line, but it's really a zone we're looking at. If you look at this area here, that's a key resistance zone. Look at that area here. So we have the price coming up to that resistance zone. Price came down, 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 went up, came down, broke through, retest, came up there as a retest. In that whole block here is a retest, and then price went up. It's not a clear cut
So
up and
the cup
handle.
could be deformed then.
Huh?
The cup could be deformed.
Yeah. It doesn't have to be. So let's go. Let's go back to the slide, right? Let's go back to the slide and let's just look at that here. So you see, even if we have the black line that just showing you just what a cup looks like here, all these areas outside here, all inside here is the structure we're looking at. So it doesn't have to be like that shape here, but it's a structure. So all this outside here, we don't really consider it here, but we are looking to identify the pattern. So all these things inside here, it can pass. So you see our resistance here, it went above the resistance, but this is just the peak of those candles here, not really so concerned about this here. It hit that area, but it came back down, right? Likewise, if we decide to look at it for the other, for here. So even though you look at the inverted cup here, look, price way down inside here. So we're looking at the basic structure, those major points, this point here, that point here, these points, we're not considering inside here, but we can see the structure, even for the handle. Look how far out it exceeds, but the structure is there. So it's basically the structure we're looking at. But it seems easier to identify, as Paul would have asked the question here. We could sort of see a little shape here. So we could see what the cup, what it looks like here with a little handle here. It is not a fully formed one as the others, but it gives us an idea. And look what happened here. Once it came back down here to form the little handle here, the price went up, retested, and then it went all the way up. Look how far, the consolidation, but all the way up here. And that's on a 4 hour. Let's see how much pips we're talking about. So even if we decided to enter back, remember we enter in back on the line, right? So this is our resistance line. So we're entering back on the line on this retest here, right? So we broke through, retested on the line here. You might have taken it down here anyways, because we see broke through and retest here. We could have taken it right at this. Let's just make it a little bigger. Breakthrough retest, convincing candle right here. So we'd have gotten into the trade right here. We'd have gotten into the trade. So we got into the trade, pulled back down to it, retested again and went up. But let's see how much pips that would have landed us. So if you had gotten in here, all the way up here, that's 600 pips movement. We wouldn't have taken all that because if you look at the bottom of the cup here, which would have been 225 pips. Remember, that's where we taking our TP, right? 225 pips, which would have been the bottom of the cup here. We take 225 pips above. And look at where it landed. Let's just mark out that zone. Look at it here. So this here, we would have entered on this line here. This would have been the bottom of the cup. So that distance here is where we say our take profit should be on the opposite side. And look at what happened. Right at that area here on the opposite side here. This is where the market stayed for quite a while. So we would have well been within reach to collect our take profit. The market would have gone up a little above, then the market pulled back down before still going higher. But we would have made our take profit, which was the same distance from the resistance line to the bottom of the cup. So that was a very safe take profit. 232 pips we would have taken here, and then the market would have continued going up after, but we would have secured that here just from that strategy here.
Okay. I think I understand. Just, you know, sometimes like when you draw the zones and thing there. I think that will make it easier.
Yeah, just being able to identify. You don't always see, it doesn't always exist here, but we can look through and see if we can identify it. My two colleagues I tell you about, they bad on that. That is all they trade on. Remember our cue here for looking for cup and handle here is when we're looking in the uptrend. If we market is going down, we're looking for the inverted. Just reset chart. What makes it a bit difficult now is that the market isn't as predictable as it is supposed to be because of all that's going on now. But prior to this, yeah, the market was highly predictable.
You said it's unpredictable because of the number of persons trading now, or because of the.
Well, I believe, well, one of the reasons why, with all this lockdown, you've had millions of new traders getting in, and the market makers are just trying to just take money from people because everybody now is looking for alternative income and everybody's trying to trade and everybody's doing that. And with all the news that are happening, and so the market is very unpredictable. That's why there are days the market just stand up. But prior to COVID, the market was almost, let's say 80% predictable. You're almost certain that daily the trend repeat themselves. As the level of surety we had before this whole COVID mess would have taken place. Kind of seeing something in that area. I'm kind of looking, instead of looking a little kind of inverted here, and you go to form the handle. We have a retest here, and then the market move down. It's not so clearly defined. But there's an easy way of cheating the system, which we wouldn't get involved in. When a case like this with me and my software, I just check I'm looking for cup and handle. And all the cup and handle on the chart is showing you one time. We have to learn to find it ourselves. So let me just play around with the time frame to see if we see any difference. So in a case like this, where I switch to the 1 hour, you see how the candles are small. They are too small to identify any pattern. So we need to just give them a little body so that we can see something happening. Look at a line, a trend line that I draw here since in around May, around the 14th of May. And look what happened here. See here, price would have broken the trend line right here. And from since then to now, what's been going on with that? It's just down all the way, down, down. Look at that. 0.50306. So let's see how much peeps I was just showing you. So if I've gotten in a long-term trade from here, that's a lot of peeps that were covered in that area here. So basically, as I said, it takes time to identify those, but we can go ahead. Let's see that moving average itself. I'll just show something here. Let's just check that area here. We have a zone here. Price here, price came down all the way down, went up, touched that area, came down. Look at it here, didn't come back all the way down, just that little area here, broke through. It broke a little here, yeah, it broke through right here. Little retest, and then price went up. As Posey hinted here, the moving average gives you makes it a little bit easier. Again, it depends on which moving average that you have, will make it even more distinct than others. But we can sort of see that shape here coming down here. Right here, we could see that shape coming in here. Up, down with a little handle here, back on the zone here to complete the handle. So that's our little handle here. And price broke through. If we do a vertical line, we could see where we broke through here. We're looking for a retest on this here. So price broke through on this candle here, retested here, right back on this zone, just this one candle, and then price took off, went all the way up. So let's do one thing and compare one thing. Let's see how far up price went to make that determination. So we got in here and price went all the way up here. Let's say roughly 70 pips up. Yeah. So look at this here. This bottom here of the red here, which is just around 70 pips, which would have been the bottom. If we look at the bottom of the cup here, which you would say, okay, the distance on the bottom, we can take that for take profit. So this is just around 68, roughly 70 pips here at the bottom of that area here. Is the same sort of a measurement we get. And if we had put from here to the top up here, we're getting that same distance here for take profit. So the movement here away from our resistance line, which from the bottom of the cup, is the same thing we have gotten after it broke through and retested. It moved up that same distance where our TP would have been. So again, let us not just be confused that because the diagram shows it as a smooth bottom cup, it has to be a smooth bottom something. It all depends on how we scale it out. So now that we scale out more, we can get a little more couply shape. I don't know if couply is a good word. A little more couply shape here. Then our support here came down to form the handle. This is our handle for the cup. This is our cup here. So our cup is here. Our handle is here. Broke through, retested here, went up. So basically, it's just a matter of going through the charts and searching and see what we find. Key is having the length of the candle so we can identify, and playing around with the time frame to be able to identify. But the moving average is helping a bit in identifying the movements. So we can play around with that and see what we identify. What I can do, however, for our next session, when we're doing those patterns, I can have the software identify some of those. And maybe I can even just demonstrate how I use the software to identify those kinds of patterns. And maybe the patterns that we've done so far, just show you how easy it is there. So what we can do, maybe use it as a guide. Maybe we can give you an assignment. I can maybe just put a currency pair or 3 or 4 currency pairs and tell you, okay, within that time frame we're looking at, see how much patterns you can identify, and then show you the patterns that we identify, so we can just compare them to know if we're on the same page. So what you may see, I may not see, or somebody may not see, but if we can go through and do some snapshots, remember we can take photos of what we're doing, right? This icon here, this photo icon takes a picture of the page that we're on. So we can identify the different areas where we think the patterns are, take a photo of it, and then we can come back and compare to see whether or not we are able to identify the same kinds of pattern. So you're not just listening and doing that here, but when it comes for you doing your little studies on your own, you should have a little assignment to do to ensure that you actually understand. So I think that's a good option we can employ here, where we are given screenshots to identify some of the patterns there. Or maybe I could do some screenshots where patterns are available and just put the pictures maybe on the chat or something, on the Telegram group, pictures where patterns exist, and you can just look at the picture and see if you can identify those patterns. So for example, let's suppose that there is a cup and handle here. I can just take a picture of this here, put it on the chat, and you should be able to see whether or not you see the cup and handle here. So I'm going to do it with it and without. Send it without, give you a couple hours, or maybe next day, put up the answers so we can identify. I think we should start doing that with all of the patterns that we've done. Find areas on the chat where the patterns exist, give you the blank chat so that you can see if you can identify the patterns, and then the next day, put up the answers so we can solidify. Maybe some multiple choice with the answers on it. Makes a lot of sense. What do you think?
Sounds good.
Yes, I'm good.
Yeah, I think that's what we're going to do to actually ensure that we master the patterns. So again, I just repeat.
Wait, but you see how you just did it there? I think that was a lot more. Bring it home more. You see, like how you did the slides, you explain it with your thing about getting on the actual chart and searching for it. We sort of learn more because we realize, okay, you don't have to look for a smooth cup or a semicircle. You can have a little dip down, you know, and those things there. So we learn more like a practical after the theoretical, so to speak.
So even right here, look at the inverted one right here. That little area here, even if we decide to start it around here, that area, there are a lot of support and resistance. And I heard the market is choppy here. We can even just sort of see here, came that area here. The handle is a bit long though. Even when it came back on the zone, it's like a double handle here that is formed, broke it through, tested, and came down where it didn't move down quite a lot. So what I'll do in a case like this, I can just take a picture of this here with no pattern on it and say, okay, fine, we have a cup and handle on this. See if you can identify it, 1 or 2. Send that out in the chat, and then maybe the evening time or whatever, or just before class, so send it off, and then after class, I'll say, okay, fine, let's look at the answers. And we're going to show here now the pictures with it drawn out. So I may draw it right here and say, this is the cup, this is the handle here.
Show us how to draw it. Show us how to draw it. So if you want to circle it or draw it for you. What we use, the drawing tool is, let me see. This
There
little
should
thing
be
here.
there should be some freehand drawing tool on this, eh?
Maybe there, yeah, the painting, I think.
Brush. No, what does the brush do? Yeah, we can use the brush to do our drawing, yeah. See, the brush gives us all those kind of things, so we can use the brush to make out the kind of shape that we want.
Okay. Okay.
Yeah, you can just increase the size. Maybe change your color or whatever you want to do. And we can do that. So we can actually use the brush to draw the patterns that we are looking at. Yeah, so I think we're going to go that route. I'm going to identify some areas here where we have a few of the patterns. Blank sheet, send it. You check it out for the day. When we come in tonight to do the session, we just review and I'll just pop it up and show here as well. These are some of the patterns that have been identified, patterns we would have done so far. I guess it's going to give us more confidence that what we do independently, we're getting there. Because if we say, okay, fine, look at the chart and try to identify, you're not certain that what you identify is it, right? But if we can present, yeah, if we can present and say, this is it here in reality, then we can always go back and do that. So I think that's how you're going to move from here on. Identify them, give you during the day, so you ponder on it, try to see if you can find it and give you the answers so we can discuss it together. Makes sense? So I'll get on that tomorrow and I'll send out some photos, blank sheets like this, where we have some of the patterns. And then later I'll send off the answers with it so we can see how the patterns are. Any more questions before we call this a night? Okay.
From me, I guess, yeah. Good night.
Yeah. All right. So we say a blessed night, and I hope that we have a wonderful week. And all those for job on Monday and Tuesday. Yeah, with me. We go see what we can do.
We want the day off. So maybe talk to the private
Black Junction.
They?
Wait, by Messi to play the job.
Well, no, yesterday when I came back home, and I packed up in the garage and I'm coming out from the car. When I look at my other car, I see a whole set of paint on it. I remember Sunday I passed through Lafayette and they had a real job down there, only to realize I get a whole set of paint on the side there from the job and them down there. I know paint is not easy to come out on vehicles, so I had a hell of a time to get the paint off. So we go play by Messi, but we go walk down. You know, as I said here, I saw some video tonight with St. Vincent, and if anybody would have seen that.
With the protest?
Yeah, and with a stone where the boss guns out head. You didn't see that?
I can't tell the protest. How much million?
No, I didn't see that.
It's a few $1 million they say can come fund. So the people protesting, they want to know what happened to the money.
Gonzalez is where St. Vincent?
St. Vincent.
St. Vincent.
Oh.
Yeah, so the peltas stone, the bossy head too. St. Vincent don't take it.
Listen, Paul, I think, right, this whole COVID situation will cause a lot of uprising.
Yeah, definitely.
It will cause a lot of uprising. You make people, you push people against you, you push them back against the wall already.
Yeah. But in the US and so, they're going to have more control because they went back for the last 2 years to take away guns from people. So most people in the US would have had guns, give up guns and so, because they tried that for the last 3 years with so much stage activities for people to bring back guns and do that here. So if people don't have guns now, they will have a little more leeway to abuse people. But at the end of the day, there's a lot of uprising all around, a lot of uprising.
Yeah,
they want to force people. Yeah, but at the end of the day, people have to know what they believe and what they stand for. And don't let people pressure people into what they don't stand for. That's all it is. We don't have a culture of standing up. We just talk in the comfort of our home, but when it comes to also stand up, we don't coming out. Yeah, support the protest, I support it. Come out and show you support. You don't coming out, you're staying inside your house and you're watching others. Yeah, we don't have that togetherness.
You You know what caused that? The backlash. I can't say when you get cut, everybody behind you just disappear and you're alone in it. So you know, so
It's
if
the
that
same
case,
thing with- yeah.
if
It's
you
the same
get
thing with
caught and
trading.
everybody stand up with you.
Yeah. Same thing with trading. 5 hours there and somebody introduce you to the trading. Why Pussy, go on, man. When I see you success, then I will come. You know? Yeah.
And people are asking you, how much you're making money already? How much you making
Yeah.
already? Like, I'm learning. I'm just learning.
Yeah, that's what it is. They work 30 years in a job and they can buy a shoe, but they just want to come overnight in trading and they want to make $1 million. And if you think only want to know when you're making, tell me I will come. As if when they come, they just go and sleep and wake up next morning with all the money. We don't like struggle. And the only thing to make us successful in anything is struggle. So I'll go ahead and I'll work on this thing here and I'll send up some photos with some charts where some patterns can be visibly seen so that we can identify them, and we're going to send out the answers also on it. So it's going to help us for the weekend. At least we have something to ponder on. So have a blessed night, everyone.
Okay, blessed night.
All right.
Okay, have a blessed night and thank you very much.
Night, everyone.
Okay.
Bye.
All right.
All right.